Okay, so let's talk about crypto. We've all seen those crazy stories, right? People becoming millionaires practically overnight. It's this super exciting new world. But let's be honest, it can also feel insanely complicated and, yeah, pretty risky. So this explainer is all about cutting through that noise. We're going to break down the absolute basics step by step so you can actually understand what's going on under the hood. But before we get into the exciting stuff, we have to start with a serious dose of reality. The numbers don't lie. Something like 90% of people who get into crypto end up losing money. That's a huge, scary number, and it's exactly why just jumping in without understanding anything is such a bad idea. But here's the good news. You don't have to be in that 90%. Seriously, the whole point of this guide is to give you the fundamental building blocks, the core knowledge you need to navigate this world smartly and hopefully join that smaller group of investors who actually know what they're doing.
So where do we possibly start? Well, we have to start at the very beginning. We need to look at the core technology that makes this whole thing tick.
First up, what even is a cryptocurrency? The simplest way to think about it is this. It's digital money. There's no physical coin you can hold. At its heart, a cryptocurrency is just a digital asset, basically lines of computer code that live on something called a blockchain. So what is a blockchain? Picture the digital ledger your bank uses to keep track of all its transactions. A blockchain is kind of like that, but with one massive difference. It's decentralized. That means no single company, no bank, no government is in control. It's a massive, shared, digital record book that keeps a super secure and permanent history of every single transaction ever. Let's make this real. Say you decide to buy a Bitcoin. The moment you do, this huge global network of computers, they're called nodes, all jump into action to verify that your transaction is legit. Once they all agree, your transaction gets locked into a new block, which is then permanently added to the chain. And boom, a secure public record is created. It's basically like having a digital receipt that the entire internet has notarized. Okay, now that you've got the basics of the tech down, let's talk about something that trips up almost every beginner. You've got to understand the difference between a crypto coin and a crypto token, because they are not the same thing. It's actually way simpler than it sounds. A crypto coin, think Bitcoin, Ethereum, Solana, has its very own unique blockchain. It's the native currency for that entire network. Crypto tokens, on the other hand, are different. They don't have their own blockchain. They're actually built on top of an existing one, like Ethereum. This means pretty much anyone with the right skills can create a new token on the Ethereum network. And when I say anyone can create a token, I mean it. Just to give you a sense of scale, check out this number. As of 2024, there are more than 20,000 different crypto tokens you could invest in. It's a massive, sprawling ecosystem, which is exactly why you have to be so careful. It's a bit of a Wild West out there. All right, so you understand the tech, you understand the different types of assets, but where do you actually buy this stuff? And probably more important, how do you keep it safe? This brings us to a huge topic, exchanges versus wallets. For most people just starting out, a centralized exchange is the easiest on-ramp. They're user-friendly, they're convenient, but there is a major catch. When you leave your crypto on an exchange, you don't really own it. The exchange does. And if that exchange goes bust, like FTX did, your money could just disappear. A personal wallet, on the other hand, gives you total control. You are your own bank. The flip side, it's a bit more complicated. And if you lose your password, your private keys, your crypto is gone. And I mean gone forever. There's no one to call. And when it comes to personal wallets, you've basically got two main flavors. You have hot wallets, which are software apps on your phone or computer. They're connected to the internet, so they're great for everyday use. But for top-tier security, especially if you're holding for the long term, you want a cold wallet. This is a physical device, kind of like a USB stick, that keeps your assets completely offline, safe and sound from any online threats. Okay, so you know how to buy it, you know how to store it. Now we get to the fun part. What should you actually buy? Let's talk about a basic investment strategy and look at the difference between what we might call safer bets and the really high-risk plays. Almost anyone who's been in this space for a while will give you the same advice. Start with the blue chips. These are the big, established, credible projects. You can think of investing in something like Bitcoin as being kind of similar to investing in the S&P 500. In a world of volatility, it's considered the bedrock, a much safer place to start your journey. So what are these blue chips we're talking about? Well, you've got the two giants, of course, Bitcoin and Ethereum. But then you also have other really well-regarded projects like Solana, BNB, and Chainlink. These are all considered more established players because they've been around, they have a ton of people using them, and a lot of development happening on their networks.
So what could this actually look like in a portfolio? Well, here's an example of a pretty sensible allocation for a beginner. You see the vast majority of it, like 85%, is in those safer blue chips. Then you might take a small slice, say 10%, for those high-risk, high-reward moonshots. And you'd keep the last 5% in cash or stablecoins, which are cryptos tied to the US dollar, just to manage the crazy price swings.
Now, when you do decide to look into those smaller, riskier projects, people call them altcoins, you absolutely need a framework. So think of this table as your personal cheat sheet. You need to ask these 5 questions for any project you look at. What's its market cap? Does it actually do something useful? Who's the team behind it? How many coins are there? And finally, is anyone actually using it?
This brings us to our final, and you know what, maybe our most important section. The world of crypto is filled with amazing innovation, but it is also absolutely crawling with scams. Knowing how to spot them isn't just a good idea, it's essential.
Here are 3 of the most common scams you need to avoid at all costs. First, pump and dumps. That's when influencers hype up a tiny coin to get everyone to buy in, and then they sell all of theirs, crashing the price. Even worse is a rug pull. That's where the developers of a project just take all the investors' money and vanish. And finally, never, ever click on random links promising you free crypto. They're almost always phishing scams trying to steal your passwords and your money. And that's it. We've covered a ton, from what a blockchain is, to the difference between coins and tokens, how to buy and store them, and what scams to watch out for. The biggest takeaway here is that while crypto can be a wild ride, knowledge is your absolute best defense. You now have a foundation that puts you way ahead of the curve. So, the only question left to think about is, now that you get it, what role do you think this technology is actually going to play in our future?